How will Solana ETFs perform relative to Bitcoin and Ethereum ETFs? That has been the burning question on everyone's minds, because people want to know whether JP Morgan had any idea what they were talking about when they predicted that $3 to $6 billion would flow into Solana following a spot ETF approval. So we analyzed all the data, the reports, and the expert opinions we could find. Surprisingly, it turns out JP Morgan was right. But here's what else the SolanaFloor Data Insights team found and what all of this really means for alt season. Solana ETPs attracted over $300 million of inflows last week. That's the largest weekly inflow ever and 3 times more than the previous record. But it's not just appetite for Solana ETPs, because across the board we saw crypto ETPs bringing in $1.9 billion. Now that brings July's total to a record-breaking $11.2 billion. Ethereum alone pulled over $1.5 billion, making last week its second best week ever. But most impressively, for the first time in 2025, Solana outpaced Bitcoin's weekly inflows, and that could signal a monumental shift in where institutional capital goes in the coming months. The most recent Solana Floor ETF investigation revealed that Solana ETFs could see well over $5 billion of inflows within the first year of being active. Now, the report also found that bearing Solana's considerable momentum in mind, we can reasonably expect that SOL ETFs could witness greater demand and inflows than Ethereum without dethroning Bitcoin itself. Here's what the charts really show us. At current prices, Solana ETFs could expect to see inflows of $2.9 billion at launch, growing to $5.52 billion in the first year of trading. In favorable market conditions, a $400 SOL could see ETF AUM reaching as high as $11.6 billion within the first year of launch alone. Now, this growth and the subsequent trading volumes from which ETF issuers generate revenue would undoubtedly encourage the world's biggest issuers to apply for Solana ETFs as well, because let's face it, nobody wants to get left behind. And we'll get onto those issuers in just a second. But for now, it seems that most reports are too busy focusing on ETH to see the bigger picture here, which is that Solana remains the top revenue-generating chain in 2025 by far, and it's the top revenue generator for the 18th consecutive week now. That is something that has never happened before. So what is the playbook that Solana ETFs will likely follow, and what can we learn from BTC and ETH ETF approvals? When spot Bitcoin ETFs launched back in January 2024, they attracted over $28 billion of assets under management, just over 3% of Bitcoin's market cap. Fast forward 1 year, and that figure rose to 5.8%. Now, when we look at past performance, we see a steep rise in both spot Solana ETF volumes and futures volumes, which supports this idea that the massive wave of buy pressure we're seeing at the moment is actually institutional FOMO. And if we zoom into where the money's been going over the last 12 months, we see these up-only charts for metrics like Bitcoin ETF AUM, daily inflows, and even on-chain holdings. Ethereum ETFs followed with more modest gains than Bitcoin's, mainly due to one big factor: no staking rewards. Kathy Wood even called this out directly on stage at Solana Accelerate. So here's a very quick reminder of what makes Solana different.
Solana has been very interesting. It is what I would call anti-fragile. In that it is really one of the few protocols that has gone through a full market cycle.
Do you anticipate a spot Solana ETF will, again, bring in new investors? How successful do you think it would be relative to those other coins?
Well, I think one of the reasons the Ether ETF has been less successful than people expected is our regulators did not allow staking. So I think the answer to your question is, will our regulators allow staking, right? For Ether, they did not. And I think that was one of the problems.
According to a recent Solana Floor report, Solana pulled in over $271 million in Q2 revenue alone, with more active wallets and transactions than all L1s and L2s combined. It's also the #1 ecosystem for new developers and has significant buying pressure from treasury companies. Names like DeFi Dev Corp, Sol Strategies, and Upexi are all publicly traded companies collectively intent on acquiring billions of dollars worth of SOL. Most recently, Upexi announced a $500 million equity line to accelerate its SOL purchases. So clearly, SOL as an asset has growing retail demand. We're seeing institutional demand ramping up with treasury companies and ETFs, and a significant portion of SOL continues to be staked. But there are some roadblocks still ahead. and some reasons why Solana ETFs could struggle to build the same level of momentum as BTC and ETH ETFs did. The most glaring reason here is that the world's largest ETF issuer, BlackRock, hasn't filed for a SOL ETF yet. That's the same firm that controls over 50% of BTC and ETH ETF volumes. Now, we know from reporting on Bloomberg analysts like James Seyfarth and Eric Balchunas that there will likely be a wave of ETFs in the second half of 2025. And of course, that the gold standard for crypto ETF growth is BlackRock's IBIT. And this is an important point because IBIT isn't just the poster child of successful crypto ETFs. It's actually the most successful ETF ever issued, period. Already at $88 billion and projected to reach $100 billion soon. So, not having a Solana ETF application by BlackRock could unfortunately significantly limit the distribution potential of SOL ETFs, particularly the case if BTC and ETH ETFs continue to perform well. And while ETF demand is real, some of it may already be priced in by these treasury plays. Now, on the bright side for us, that front-running of TradFi demand for ETFs is bullish for anyone positioned in alts ahead of parabolic alt season rallies, which we could see later in the year. So, when approval? The SEC's soft deadline is July 31st, which is right around the corner, but all eyes are on October 10th as the final decision date. But insiders say approvals could come even earlier for a few reasons. Primarily because SSK ETFs were greenlit using what James Seyfarth called a clever legal and regulatory workaround. And it's that precedent that could fast-track other issues as well. And we also know that Rex Osprey's staking-enabled SOL ETF continues to grow, having reached an impressive $134.8 million in AUM just yesterday, and that is a new all-time high. Meanwhile, and luckily for us, analysts like Benjamin Cohen still expect the typical alt-season rotation patterns to play out this time around, ETH outperforming BTC until around October, followed by alt-season. Now that would align almost perfectly with a SOL ETF green light, and potentially pave the way for what Raoul Pal has so affectionately named the banana zone. So that's where we are. ETFs are the next major unlock following over a year of sustained network testing under immense retail pressure. Institutions now see that Solana can handle the volume and the demand. Solana's fundamentals are solid. The network leads in revenue, usage, and even developer activity. Now, with staking-enabled ETFs like SSK, post-October inflows could conceivably outpace Ethereum ETFs, which have attracted well over $10 billion. If Solana ETFs are approved and all signs overwhelmingly point to a yes right now, we're looking at $5.5 billion of capital in year one, and the start of a new chapter for crypto, for better or worse. For the full Solana Floor report, you can of course head to SolanaFloor.com, and if you want to stay ahead of the curve, then don't forget to subscribe now, and you'll get notified when we release further reports. I want to thank you for tuning in, and I'll see you next time for more of the very latest.